Well, good afternoon, everybody. My name is Dan Strecker from Walker Jackson Mortgage, and I appreciate you being here. As you can see, Liz has me all wired up. I didn't know I was going to be doing a TV interview today, so she's got me a little intimidated. But and I think Stokes had some technology issues, so hopefully things are going to work well through this. But I'm going to do a little bit of introduction to who Walker Jackson is, who I am, and then very briefly and open it up to some questions. So bear with us. We'll get things started here. All right, we're in good shape. Hopefully everybody can see everything. So who is Walker Jackson? We're a correspondent lender. If you're not familiar with that term, what that means is the loans fund in our name. It's our underwriters, our processors, our wires, and then we deliver the loan in the end to an end investor. So we're in total control of the process. We're a company based out of Virginia. So we have local, same time zone, so I know that was an issue in past, and we won't have an issue with that now. We've been in South Carolina. I opened the office here in South Carolina in 2008. You know, when everyone else was kind of closing up shop, and Walker Jackson was willing to take some risk on me, and I feel blessed that they did. I have a fantastic team, and we've been able to achieve quite a bit of success in that time. We grew to a point where in 2010 we funded a little over $65 million in just our office here in the Charleston market. Took advantage of the refinance boom, as well as some great, fantastic relationships with our strategic partners. We also have a wholesale division that services other broker lenders. So you may have, through a third party, actually done a loan with Walker Jackson. And in South Carolina, I believe they did about $50 million. So as a company, we funded $1 billion. It's a pretty big number. We operate up and down the East Coast. So we have excellent financial stability, which means our doors aren't going to close. We're not going to have trouble funding our deals, but we're small enough to maneuver and service our market. With the addition of the sharp people that we've gotten from residential mortgage, we'll have 9 officers so far to service this market, and my goal is to add 3 more in the general market to give enough coverage for all of our agents. And they're very sharp folks. What sets us apart? I'm sure you've been called upon by a lot of different loan officers who are promising that they're the best and their company's the best. So one thing I think that's critical in this market and sets us apart is our experience. Our average loan officers, including the residential group and my group, is about 14 years of experience. So that's important on 2 levels. If they survive the last 3 years, they're good. Same in your line of work. Second, as you probably know, guidelines are changing almost on a weekly basis, and there are little subtle differences and intricacies, and we stay on top of that. And that's been able to get us countless deals and help on deals that other lenders couldn't do just by us knowing the guidelines and knowing some of these subtle differences. And it's also been able to help the exasperation of maybe starting a deal and having it get all the way to the end and falling apart at the last minute. We might be able to identify something up front that either just says, unfortunately, we can't do it, or we can head it off. Communication. Everybody talks about it. Everybody says they know how to do it. We know how to do it really well. And that could be phone, email, face-to-face, you know, however you like to. But it's mostly about delivering news in an appropriate manner so that we can move through the transaction as smooth as possible. And, you know, our folks have been very good at it, and I try to pride myself on doing that as well. It's not always good news. It just needs to be timely and pertinent. So service, this is where we made our name. This is how we got so quickly to a $65, $70 million funding at a retail group, and how our loan officers gained so much market share. From the time we submit a loan to the time we get a loan commitment is 48 hours on average, and we close loans in about 3 to 4 weeks. So we do a fantastic job of taking a borrower from start to finish in a reasonable amount of time and getting things done in a smooth way. Product knowledge, creativity. This goes a little bit hand in hand with the experience that I talked about. You know, again, with the subtle differences of what's going on out there, you really have to understand what's the best product for your client, you know, what bucket they fit in, what's going to be the best financially for them. And we're creative. That doesn't mean that we can pull miracles off, but what it does mean is that we've just found really clever solutions to some loans that other folks just couldn't get done, and that falls in line with experience as well as our teamwork that we work on in talking to each other. Education, we're fully licensed. With this whole NMLS thing, all of our loan officers had to go through 20 hours of continuing education. Didn't matter whether you've been in the business a year or 20. 20 hours continuing education. We had to get passed by a national and a state test. We had to be fingerprinted twice. We had to turn in our credit reports. You know, I held on to my two 4-year-old and a 2-year-old boy. They didn't ask for those, but we're just short of that. But what that means is that we went through a rigorous process to prove our ability to be professionals and do this job. That's not to say that the people that didn't are less qualified than us, but I think it does give us a little bit more credibility than some of the folks that did not have to go through this process. So we take pride in that, as well as the continuing education we have to do. And kind of one of our mantras is we put you first. That's you, that's the client. It's understanding the value of every deal. It's understanding the value of an ongoing relationship. It's not taking for granted any kind of a partnership. You know, it's an intangible. I don't know how to describe it, but I feel like we do that very well, and that's really a tribute to the loan officers that you're going to be dealing with. Underwriting and process flow. I think I touched upon a little bit of this. I think the past partnership you had required a little bit more complete of a package. We don't. We're not going to hold things up for an appraisal, title, tax transcripts. We're going to submit that file when we have enough to approve a loan. And what that does for you is it reassures your client up front that, yes, you've got a loan. We just need to clear these conditions, appraisal, etc. It lets you know whether you've got a legitimate deal to count on from your funding perspective, and it lets the seller know that they have a legitimate buyer. So we try to handle that pretty quickly. 40-hour underwriting approvals, like I said, you know, clients get pretty anxious once they've turned in their information. They want to know that they're okay, and so we try to stick to this. I think the worst it ever got in the refinance boom was 72 hours, so we're pretty good at that. Local underwriting and processing, understand that may have been caused some issues before with Alaska time, but not only is it a time zone issue, but to us, I can physically meet with these folks and build that relationship in Virginia, North Carolina. My team can physically meet with them and build that relationship. That helps our communication line up the ladder to go ahead and get exceptions and build trust and build that relationship. Like I said, closings 3 to 4 weeks. We feel like we're among the best in the market at that. Each deal's different, but we very rarely have to push back closings. Doesn't mean we won't, but we're pretty good at meeting our dates. We have a fantastic reputation with our attorneys for our closing process, our wires. That is seamless. I think I've heard horror stories of HUDs having to go out, be approved before packages are sent. I've heard horror stories of HUDs, you know, taking days to get approved. The ladies that work in that closing department, on average, approve that HUD from that attorney within about 20 to 30 minutes. They're fantastic. That's all I can say, and we use a lot of the same local attorneys that y'all use. So I think we're going to be in great shape there, as I said. So the team, that's my fancy title. Really, I'm a local manager, and I'm a glorified processor to help my loan officers get their loans closed. Julia Chisholm, Catherine Burgess, Steve Tharp, Ricky Dixon, and Carol Jo Horn, all are excellent loan officers who are coming over from the residential group, and I'm sure you've used them before. Rexanne, my wife, loan officer with us, Jennifer Williams, Charles Conley, and Richard Peck, part of my local team here. And Karen Beals is a retail processing manager who has operations experience, operational manager experience. She works in Charlotte, North Carolina, and is just an absolutely fantastic resource for us, and really prides herself on making sure that that file gets to closing on time, and she's a very, very proactive individual. She is kind of the heartbeat of what gets us to the close. So I thought the value of this meeting may be in the question and answers. You know, our products are in large part within the box of a majority of what's going on out there. Our pricing is very good. You know, we're not the absolute best out there, but we hang our hat on service. But our rates are going to be very competitive. Our fees are very competitive. And overall, I feel blessed for this opportunity. I think we have a fantastic company to partner with you. And I look forward to capturing more business and being a value partner. So at this point, I guess I would open up to any questions that you may have. And I think I'm a little unfamiliar with this system, but I think my lovely assistant, Mama Liz, will be able to field the questions for me, if there are any. Okay, first question that came in is, will we be able to do the 203K loans? At present, no. Ultimately, yes. We're in the process of finding the appropriate lenders to provide us with that product. In general, when we have a product, we need to have 2 different lenders to deliver it to in case one, for some reason, doesn't like it. So we're in the process, I think, of finding the second lender. It's an interesting first question because there's actually the last 2 deals that came across our table that thought they needed to go 203K. We were actually able to get them done in an FHA loan because the repairs needed were fairly minimal, and we found a creative way, for lack of better terms, to get that done. So long term, we will get that, and I don't know exactly when, but I'm hoping, you know, in the very, very near future. Okay, there's a question regarding postage, whether we'll help out with postage, things like that. I can probably give more of a blanket answer to some of that, and then some of that you'll probably have to get an answer through your broker, through you know, Liz, Boyd. But in essence, we've got a marketing arrangement with you all, but also my individual loan officers get a marketing allowance each month dependent upon their volume. So their amount varies up and down. So in a way, the answer would be yes. They should have ability to do that with you. I guess it depends on how much and whether you're partnering with them. But you know, from a large company scale, I don't have any program to do that. So it'd be probably an individual loan officer thing that they can use their marketing money to partner with you on a number of things. Manufactured housing is a question, do we have it? We don't now. That's a really tough one to find out there from an investor standpoint, obviously from the risk standpoint. What I do know, having been in North and South Carolina for, gosh, 12, 13 years, I know there's a stigma to it, and it's probably not fair. There are some higher end manufactured housing that would warrant some good financing. So again, it is a product that we're definitely looking for. Right now we don't have it. We have to find 2 investors that will take it from us. And we have to find 2 investors that will give us a good product. I don't want a bad manufactured housing, bad pricing. So it's on my wish list. And just to reiterate a little bit on the product side, my heart beats as a sales guy. So I hold a fancy title, and they expect me to act a lot like a manager, which I do. But my goal is to get as many products as I can out there in the field. You know, hopefully do it right so that our company is stable. But so I'm on your side and always pushing to get as many products. Okay. USDA and VA 620, FHA 640. So I think the FHA is a little higher than some people are doing, and that's kind of a delicate subject out there. So we handle that in 2 ways. One, we have the ability to help folks improve their credit, and there's some really minor things sometimes. I'll give you an example. I had a client the other day that had, I think, let's say a 602 credit score, and we actually ran a quick program. It's instant that I can look into their credit, and by paying down a $300 credit card, because it was one of his only revolving lines, to $10, it increased his score 44 points. That's probably a rare occasion, but we're able to do that and meet our obligation. getting below 640 on the FHA is a little hard right now. Some of the bigger banks are doing it on paper, meaning they're advertising that they're doing it, but it's much harder to get it through. Pricing is much higher. So again, it's one of those things that I'm pushing to get down to at least 620. It'd probably be pretty hard to get FHA to 600, but I think we can get it to 620 eventually, and then USDA and VA are 620 already. No, other than the length of time that the banks take to approve the short sale contract. I'm sorry. The question was, is there any problems getting a short sale contract done? And so my answer is no. I mean, we treat it like any other deal. It just seems to take forever for the sellers to take care of that. The only other issue I can think of with regards to them that you may want to proactively handle is we always need some kind of documentation to prove that whomever is going to come to that closing has authority to sign for that deal. So if it's a bank, we need to know that John Doe from the bank has authority to sign as the seller for that deal. That seems to be the only condition that pops up that we end up getting at the last second. I'm sorry. I keep forgetting to repeat the question. The question was what fees are associated with a VA loan. Let me answer the first question. All of our fees are third-party fees with the exception of a commitment fee. We charge a $780 commitment fee on each loan. In large part, all of our pricing comes without origination, so $780 becomes our only fee. In addition to, we charge a very minimal credit report fee, $13, $30, somewhere in there. Everything else is third-party, appraisal, insurance. Now, a VA deal, we're not allowed to charge that $780 commitment fee, so that goes away. So other than that, it's just our normal, gosh, there wouldn't be any fees, I guess, in that case if we did a zero origination. So it would just be third-party fees in that case. But the $780s we cannot charge on a VA deal. So you say that Walker Jackson does not charge an origination fee? Liz asked if I'm saying that Walker Jackson does not charge an origination fee. And so the answer is yes. Our base pricing comes with no origination fee. From there, if a client wants to buy down the rate, perhaps sellers contributing to costs, you can buy down that rate. So when I compare to residential's old rate sheet, our rates were the same. We had no origination. They had 1%. So we find ourselves very competitive there. We've been very competitive across the market in delivering that. And so we feel that's a pretty good advantage, and we only charge it if a client wants to buy down the rate. Yeah, I can bring some of those up. Liz brought one up that seems to be familiar. Lot loans. We don't do those. I'll tell you some of the products we don't do. You all can probably do this as well, but we're firm believers, and we feel we're very good at passing business off. We have a lot of relationships established in the market with other bankers and other lenders, and if I can't do a lot loan, we know people that can, and we'll put you in touch with them to take care of your client. We believe that if we service you well, you'll still use us. You're not going to run away and use them for everything. But we think that's just the right thing to do. So don't do lot loans. Try to think of some other fringe ones. We do jumbo. We do jumbo presently up to $1.5 million. We think our pricing is decent. It's not phenomenal, but it's decent. I think our 30-year fixed jumbo the other day was 5.375 with zero origination. I forget the ARM rates, but they were fairly good on a 5, 7, and 10-year ARM. We are in the process increasing our jumbo amounts to $3 million, and hopefully finding even more aggressive pricing with that. So, and that's underwritten again through Chantilly. Liz's question was construction of perm. We actually, that $65 million that we did last year, quite a bit was construction of perm. We don't have a one-time close construction of perm loan. We did a lot of two-time closes because most of the deals we were doing were modular homes that were being built in 60 to 90 days. So they were going up pretty quick, and we didn't have to worry about rates. We had an excellent source that just went away January 1st. They stopped doing it. We have 2 other sources that we can sign up again if the need is there. So they would be one-time construction closes, and then we would do the takeout loan. And that's a tricky tricky product, and we learned a lot in the last 3 years on getting those done. FHA, VA, USDA can do construction and permits. Really neat the things you can do with that program that most loan officers have no clue on how to deal with it. And I've got a couple loan officers along with myself that kind of cut their teeth in that product. So if that's a big need, we can get that going again and get that signed up. So, all right. I'm not sure. There's no other questions right now, and I'm not sure that I'm trying to think of some other things. I did want to reassure you I'm not a stuffy suit guy. Ken Rowe was picking on me in the Isle of Palms today, but you know, first of all, I've got to compete with Claude and Boyd. Yeah. Secondly, I want to try to give a first impression, a good first impression. So, but I'll have golf shirts on sometimes, so don't worry about that. So. Okay, I think we're wrapping up. I've seen a lot of you before. I'm going to continue to visit offices. I really look forward to helping support you and the loan officers that are servicing you, and look forward to meeting you all, and can't wait to really get this partnership going. So thank you for your time, and I hope you all have a great 2011.